Welcome back to Crown's Crypto Cave and another different type of video today. As you can see, I'm very terrible with getting my own information out there. However, the Art and Application of Technical Analysis Master's program will be essentially on sale for the next 24 hours. At the point of July 15th, the price will be going up. And I just want to make sure that everyone or anyone who is interested in this program has full information in that regard. And definitely check out the page if you already haven't. I'll let the reviews kind of speak for themselves. You can certainly check them out right over here. And we have some nice, or I guess it's a little bit easier seeing through this link right here, which brings you to this page. So beautiful, beautiful, beautiful. I'll let you go through that yourself. I'll stop talking about myself and talk about the damn charts, because this is what you came here for. All right, and I wanted to do a quick video as we have a couple interesting things forming, and I wanted to make sure that I had my thoughts out there so I could prepare myself for this next week to come, as typically Saturday is kind of a slowish day. I think we've only just seen about a $50 range the whole damn day, give or take a few bucks, but you know, it's just tightening up. And when we're tightening up, when we're consolidating, typically it leads to a big move. And right now, the consequences of such a big move could produce really big rippling effects for the next weekly is what I want to get out here. So here we go. We have the daily right here. Not too much to see on the daily. We put in a little bit of a doji-ish formation right here on not that heavy volume, nothing too crazy right there. However, we have formed a range by coming down here, and it's best seen on our lower time frames, especially our 4-hour. Is where I'll be doing this chart. And to me, with the negation of what everyone was looking over here as an inverted head and shoulder with a double head and a left shoulder and a right shoulder somewhere right around here, or perhaps right around here, looks like it's been completely negated. And again, if you're the kind of person who's been tuning into content like this, you've probably known this or known my thoughts on this, that it was very unlikely to be an inverse head and shoulders, especially with this rejection right here, which looks to be a pure liquidity run play. Again, that's the sort of thing that you'll be getting in the technical analysis program, understanding those underlying market dynamics. And when you move the price away after a rejection like that very quickly, as we saw with this 4-hour going, traveling about $300 quite quickly, that's typically a big sign that big money was just using that for some sort of engineered liquidity, if you want to call it that. Anyways, since then, we've essentially morphed into a bear flag. And also, more importantly, I want to talk about this just for one more second over here. There's also a very big reason why this was a huge rejection. And it's essentially because, for the very simplest reason, we were unable to create a higher high with regards to this point right here. So in just the most simple ways of technical analysis or any sort of analysis, you don't have an uptrend until you have higher highs. So again, that was, we had several other things telling us about that. The volume characteristics were wrong. The shape on some exchanges were wrong. And overall, the formation was wrong, except for on Finex up until this point right here. Okay, so enough about that. We need to talk about stuff that's actually relevant right now. Okay, so since then, it's kind of morphed into this bear flag formation with the support trend line rising over time, coming right around here in this blue box territory, somewhere right around 6150-ish on Finex, and this upper resistance trend line, rising actually a little bit aggressively, which you'd imagine would probably intersect somewhere right around 7100 now. So again, here's the big point about this video. As long as we're within this range, this thing can play rope-a-dope along this support and this resistance, and really just mess with your mind and be extremely frustrating. So my point with this is that my sort of plan, my sort of strategy myself, is to kind of sit back and wait for a big break of either this area right here, your support trend line, indicating a breakdown, or this area right here, whether it's right here, depending upon where we kind of approach it at, it could be over here. The big point is, as long as we're living below there, I don't want to have a position. If we broke out above there, maybe we do have a change of behavior, and at that point, I'd have to really reevaluate my whole bear stance within this market. In the more immediate time frames, you can see that yes, indeed, we do have some immediate resistance, or the kind of the range that we're playing right now in this very uneventful Saturday thus far. Maybe I might be taking these words back very soon, but we've been playing between this resistance at 6,300 and this support at about 6,150. So again, if you are the type of person to be trading these lower time frames, just be aware that we have been kind of tightening up this price action for a decent amount of time. So if we do get a breakout or breakdown, it's probably gonna happen quite fast. So again, if you are trading the range, or sorry, if I was trading the range, I'd be managing my risk very, very quickly, and I'd probably be more conservative more aggressive with managing my risk than typically I am. If you do get above this resistance right here, where's your next big level? Well, right around here would kind of make sense. This horizontal area right here. So if I wanted to play that range, it's likely going to be your 4 hour 100 exponential. That cyan line right there is probably going to curl around and be around 6,400. If you get above there, well, then you got another area right here, and of course, there is a million of these, unfortunately, which is likely to be your 200 exponential. And then above there, you got another big play. So again, this is kind of if I am playing ranges, if I am the type of person looking for these shorter term trades, this is what I'd be kind of basing them off of. Of course, by the same token, we are much closer to this support down here, so it is technically closer to breaking down than breaking out. As far as the overall formation right here, let's see what our oscillator is telling us right now. And our RSI is actually heading back into the neutral zone, starting to use the exponential as support. And we did. Here on the RSI, we did have bearish divergence over here, and this move over here was actually quite aggressive, agreeing with price action that we are actually gaining momentum to the downside. So the RSI is actually it's kind of giving you some mixed signals. It's a little bit more bearish than anything. It certainly has not gone bullish just yet. What I'm looking for on the RSI is to get back into like the 65 region. On your stochastics, you are heading into that bullish zone. You have had a nice crossover. So again, there's mixed signals right now, and when I have mixed signals, it makes me a little bit less confident in my trade. So this is why I'm actually not going to be trading this range myself. I'm waiting for the big play, like I said earlier, below here or above here. And let's just talk about the validity of this, or why I'm happy to be waiting for that. And it's quite clear, or it's quite clear. If I wait for the big for this big bear flag right here to kind of play out, and I'm put it on an 8 hour right now. If I wait for this to play out, well, we can make a measure move off that, and you know what? This is why I'm happy to kind of sit back and wait for confirmation. But if we do apply a measure move, and again, this is making the assumption that we do break this out to the downside. Again, I'm not saying it's going to happen just yet. I'm not saying that's going to happen at all. I'm just saying that if we do get confirmation with some sort of a 2 hour perhaps closing below this trend line right here, and especially more conservatively this area right here at 60.40, I think there'd be no questions asked around that point. Then this measure move would take us down to this level right here. Again, this 4,400 level. Well, why is that significant? Why is that important? Let me just take this off right here. Well. If we look over here, we can find some other things that kind of agree with this analysis. Now, if that is true, then we can also look at this as an inverted cup and handle. We do have the right volume characteristics, kind of low volume distribution going on over here, high volume being done in your extremities. I like that. The shape is right. The volume's right. We can make a measure move off this, and let's see what it kind of spits back out at us. Again, this one actually has been confirmed to the downside, but sometimes they can get shaken out. Similar to our measure move over here, it's kind of within that range. Again, measure moves, they're not an exact thing, but they do get us within the realm. They do get us within the ballpark, and I believe that we do have a range right here, especially when you look at this area as a horizontal area, which I do believe it is better represented as. So again, maybe I should put a blue box somewhere in there, the good old rectangle of peace and prosperity, just right in there. Oh, come on, baby. There we go. Something like that is what I'll do to kind of represent that range. And what else do we have pointing towards that? Because we actually, I always want to be as thorough as possible, right? And if we go over here to Bitstamp, one of our longest running exchanges, well, we have some interesting stuff indeed. As let me just kind of get rid of some of these over here, and I'm gonna put it on the weekly. And look at this. I took a Fibonacci retracement from the last market cycle's low to the high of 20,000 of this, essentially the high of this market cycle. And your 886 Fibonacci retracement would be very, very well aligning with this area right here. Again, 4,400, 4,500 area. So now we have three things pointing towards there. What else do we have? We also have the purple 200 exponential moving average right here, likely going to start curling around and finding some sort of a bed, if you want to call it that, somewhere right around here. And also, more importantly, more importantly, I want to talk about this for a second. Not only do we have this nice horizontal just support going right here, which we talked about, in the on the Phoenix chart, coming again around 4,400, where a lot of volume was done in the past over here in August and September. So you do know that people are very likely interested around that area. Now, what else can we look at over here? Well, this is Bitstamp, which is the longest running exchange, and on the logarithmic trend, the logarithmic time frame, we can identify a major support trend line that's been valid for pretty much the inception of Bitcoin ever since the Genesis block. Again, this is a 10-year, almost a 10-year valid trend line spanning all the way back. And if we kind of, best do like a regression best fits along this area right here, it's never been broken. And more importantly, it's never, like every time it's been touched, over here, and several times over here, it's never gone lower. So from a historical perspective, this has it has a good history so far. It doesn't mean that it won't break over time. And yes, of course, trend lines were made to be broken. I mean, there's a good old saying about that. Trend line was made to be broken. I don't know if anyone's actually said that, but you know what? I like it. Anyways, so over here, that trend line would very obviously be intersecting our horizontal area right around this 4,400 to 4,500 range, which is also intersecting with this logarithmic downtrend line in your 2018 market cycle of your top to that first market phase where you kind of in this area right here. Very similar behavior in 2014. Sorry, let me just rearrange this. There we go. And in 2014, you can see right here that first logarithmic trend line is kind of where you found your lows off of. And again, you found your ultimate lows off the intersection of the past market cycle's strong support area and this logarithmic trend line. So again, another thing just kind of pointing in that direction. But I also want to be extremely clear with historical analysis. It's never a one-to-one thing. You never know. You can't just say this happened there, so this is going to happen here. That's not how it works, or at least in my experience, that's not how it works. But what does work, or what typically does have relevance over time, is the way that we can look at these indicators and the way that we can kind of smooth out price action over time using them. Speaking of, let's go check out our weekly RSI, because there's something to kind of pick apart over here as well. In our weekly, and we have a very similar RSI pattern going on in 2014 and 2018 once again. This is also why I don't believe that we're doing any sort of, V bottom out of here like we did in 2013, basically going parabolic over here, because the RSI never got into the bearish zone at all whatsoever. In fact, it quite clearly rejected from the bearish zone going below the 50 area right here. And it was only in 2014 where we first went into that bearish zone below 45 area. Right in here. And same thing, ever since then into 2018, this is the second time that we've essentially been living below the bearish zone for quite some time, using this exponential as resistance as we kind of work our way through here. So again, I do want to point out a couple other things here though, because there are always different, dissenting opinions, right? And I always want to be as thorough as possible with representing, the potential possibilities with this current price action. So as always, that's a little bit of a bearish scenario. But let's talk about what could be, or I always want to look at what could be a more bullish scenario, or at least something differing with my opinion that could be possible. And over here, I want to bring your attention to the exponential moving averages right here. Okay, that cyan line is your 100 exponential moving average. That purple line is your 200 exponential moving average. And the cyan line has crossed to the downside of your purple line. The reason why this is important is because it tells what the bots and algorithms of the world are likely doing. And it seems very visually apparent to me that they have intensified their sell programs over time. First over here with your traditional death cross, that green line, the 55 crossing the downside of your 200, that purple line right there. And then again over here, just intensifying the selling. So I want you to put in your mind's eye this price action going on over here. Once we get the cross, we have a major dump, consolidate, pump back up, test your yellow 21 exponential right there, dump back down a little bit lower, then pump back up above your 21, reach for that green 55, and then dump back down below your yellow 21. All right, let's go look at the only other time, we've ever gotten this cross ever in the almost 10-year history of Bitcoin. And again, the reason why I believe that this is relevant is because it's likely telling the story of what the bots and the algorithms are programmed to do right now. Okay, so doesn't this look familiar? Well, probably if you're familiar with me, you've probably seen this a million goddamn times. But if you're not, let's go through it together. So Very similar market cycle overall. And here is the only other time in Bitcoin's almost 10-year history that you've ever gotten this cross. And look at the price action being very, 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 very brotherly in characteristics. I'll say that. I'll use that kind of phrase over there. And you have this initial dump right here, consolidate, pump back up, test your 21 exponent, your yellow 21 exponential right there, dump back down a little bit lower. It's obviously more aggressive in 2014, but again, that's why you can't analyze these, stick by stick. Then we pump back up above the yellow 21, reach for that 55, that green 55, then dump back down. But here, look at this. In 2014, we find this secondary low kind of at the local low of your prior area right here if you cut off the wicks. And then we pump back up, putting in the bull trap of death before falling down to our ultimate low of the 2014 market cycle. So this bull trap is something that I want to have in the back of my mind as something that's possible. I'm not saying that's going to happen, but it's certainly possible, as we have been playing out this price action pretty damn similarly. Again, we're not necessarily charting Bitcoin, we're charting human emotions, and that is something that is consistent over time. Okay, I won't get into that tirade right now, but if I put on my drawing tools over here, we can see something very clear. We have a formation going on right here. We have a formation of, look at that, a bear flag in what I believe that we are kind of playing out in our current pattern. Now, on this bear flag, the question is that I'm asking myself right now, where would we be in relation to the historical price action? So obviously in 2018, I believe that we have a bear flag going on as well. But in 2014, you come back down here, which I think we might be right here, and then we pump back up and test the upper resistance of this bear flag, and in 2014 we do test your purple 200 exponential right there. Now let's kind of scroll on over and see what that would equate to in the current price action. Again, I'm not saying this is going to happen. I'm just saying it's a possibility. Okay, so over here, very same thing. Let me just kind of get rid of this, as it's not really relevant to our discussion right now. But do not take that as that not being, relevant at all anymore. Okay, I think this kind of represents it, all we need to be. All right, let me just get rid of this and get rid of this. And here we go. So yes, we have the same sort of price action after this nice dumping, and we've created a bear flag similarly to how we have in 2014. Let me just kind of get that good. There we go. And what this would likely imply is actually another test of your upper resistance right here, the blue box area, perhaps, again, coming in around 7,100 to maybe even all the way to 7,400. Now, yes, we do wake up and test your purple 200 exponential right there. So I always want to keep that cognizant in my mind as well. But I do want to offer this up as a potential scenario of something that could happen, as again, we have been playing this formation out very similarly, very, 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 very similarly. Again, not one-to-one, but brotherly enough to kind of look at and take something from, at the very least. So going on over here, this is why I don't want to take a position within the context of this bear flag right now, because if I can just wait for the break of this area right here, I believe that it's a very, 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 very good quality, a very high quality trade to be making, because the risk reward is, I think, extremely favorable, as we do have we have several things pointing down to that 4,400 level. And if we do break it out to the upside, that is always possible. Just because it's a bear flag does not mean that it can't break out to the upside. Just means that it's a lot less likely. I've certainly seen them break out to the upside. And if it did break out to the upside and kind of got above this area right here, the blue box area, at that point in time, I would not be so damn bearish on the market, and I would go neutral. So again, that area being, it's kind of big right now as we are rising over time, but about 7,100 to almost 7,400 now. Wow. So yeah, that's kind of what I see in the most immediate future. Also, I do want to just point out this one other just weird thing. Again, I just want to point out just one little weird thing. But everyone's talking about a Bitcoin ETF, right? And we do have some sort of information that around August 10th will be likely something will be announced, whether they approve it or not. Now, it has also been stated that they can extend that up to another 40 or 45 days. I forget the exact number, something like that. And very funnily enough, this cross right here, where all of these areas are converging, again, we talked about all the measure moves taking us down there. We talked about the fib. We talked about your exponentials. We talked about our horizontals. We talked about our logarithmics. We talked about, what else did we talk? Did we miss anything there? I hope not. Anyways, this area right here, very funnily enough, would intersect around that August 10th date. So I'm not saying that I don't have a crystal ball here. I'm not saying anything like that. I'm just saying if, we do have a very interesting technical analysis way forwards from here. And I do really want to get these thoughts out as something that is a potential to happen. And with that said, I think it's going to actually kind of wrap up this video right now. Actually, we should talk about one more formation right here. There's also another reason why this bear flag is so important, and the reason why respecting this upper resistance right here is has so much implications for price action. Now, with this bear flag, with this area being respected right here, we do have an inverted cup and handle, an amazingly massive inverted cup and handle, but it does work nonetheless. So I'd like to kind of, point this out as well as something that, a potential thing that could happen. I'm not saying that's going to happen. And yes, this would come with the caveat that, listen carefully, because I don't want this to be misconstrued. As sometimes you never know how people might take it on the good old internets. But I hope that this is good intentioned here. Anyways, so as long as we're respecting this, then this is valid. But if we were to violate this resistance trend line right here and trade above it and start closing, higher level time frames above it, then this whole idea I'm about to present to you would be invalidated. Okay, with that said, we're just going to assume, again, making the assumption that this is so far so good. Well, we can make a measure move off this inverted cup and handle, and let's just see where does that kind of spit us back out. And voila, we got a nice measure move stabbing us right down into this blue box territory right here, which is your former nice horizontal trend line going on over here. A lot of volume being done over there, so I like that for a good historical sense. And also it's your 886 Fibonacci retracement right there. So yeah, let's go see if we have any other things pointing us towards that way. All right, back on over here on Bitstamp as we can get the most price history in of all exchanges that I believe are available on TradingView. And look at this. If we put on our regular moving averages, you can see right here that red moving average is your 200 simple moving average. And you'd imagine that if this idea weren't invalidated, essentially, then this red moving average would start to curl off, level off, and come into this blue box territory again near your 886 Fibonacci retracement. Do we have any other thing pointing us towards there? Well, actually we do. In the 2014 market cycle, we bottomed on this 886 Fibonacci retracement. And by the way, just as a caveat, the 886 is not in your default Fibonacci tool. You have to add it yourself, but yes, it is a Fibonacci number. Okay, and we essentially accumulated in this range right here between the 886 and the 786 for quite some time. So again, a lot of things pointing every which way. I'm just kind of offering up ideas here, and they're trigger points. This is what I believe technical analysis is about: is figuring out different scenarios, their triggering points, and then once those triggering points are hit, well, at that point in time, you can make a good risk reward probabilistic trade in your favor, typically. Okay, with that said, is there anything else I want to look at over here? I think that covers just about everything. Again, guys, if you are interested in the technical analysis program, the art and application of technical analysis, which is a full-on roadmap of my sort of strategies that I use myself to trade, everything that I've found useful over the years, everything that I quite literally have spent, my whole adult life immersing myself in, with all regards of technical analysis, trading strategies, market dynamics, risk, and position management. Mastery is included within this program. Definitely check it out if you're interested. Again, it's on sale for the next 24 hours. Also, more importantly, oh my God, I almost forgot. There will be, of course, you can't have a price raise without adding anything new. And what will be added after the 15th is we will have a Discord group. This Discord group will be your sort of tribe, your sort of hand-selected, curated people around you. Like a tribe of like-minded individuals, all looking for the same thing, converging with each other. This will be hosted on our Discord channel. If you're not involved in the Discord channel, definitely check it out. The link's in the description below, as is the link for this program. and it'll just be a great place for us to kind of get together, discuss all the strategies, discuss trades, discuss all sorts of cool things that we're doing with respect to the program. As you know, it's been heavily asked for in the past from the people who are in the program so far. So I thought it's a pretty damn good idea actually, and now we will be implementing it. So again, guys, it's been an absolute pleasure speaking with you on this lovely Saturday evening. I hope everyone has a beautiful rest of your Saturday, and I'll be speaking with you guys soon. Take care.